Hi, good morning, good day, bienvenue, welcome wherever you are. Welcome to our global webinar, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, markets, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. And today it's Wednesday, 22nd of August 2018. Welcome to our webinar. Like every day, we will start with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a startup, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. Also, other documents, what you like maybe to see, like key information documents, our kits. Also, there you will find something about the retail clients and professional clients. Since August 2018, there's a difference in the whole European Union about the different leverage steps, what you can get as a retail client or professional clients. All details on our web pages like admiralmarkets.com. Yeah, ESMA is one of the topics of the year. A picture shows more than 1,000 words. If you trade at the DAX 30 or euro dollar before the ESMA regulation, the margin requirements was quite lower. And now as a retail client, the margin requirements will be like you see on the pictures. If you are a professional trader and you like to apply for the professional client status, you can still have a higher leverage. There are some differences for retail clients and professional clients, like retail clients will get unlimited protection against negative balances. Professional clients will get at Admiral Markets via our negative balance protection policy a protection up to 50,000 British pounds, what is around about 70,000 euro. All details and how to apply and more difference on our webpage, like here also linked. This is me. My name is Jens. I'm the German guy from Admiral Markets. We are a big international broker, over 18 country offices, so my English made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. Usually on Wednesday, it's Giancarlo's day, but Giancarlo is now on summer holiday. So in the summer holiday period of Giancarlo, we have another day trader. His name is Jens Klatt. So in a couple of seconds, you will see Jens. On Thursday, it's Marco's day. On Friday, it's DAX day. Our leading day traders live every business day, every trading day on the same time. And of course, if you like to trade Forex and CFDs, many benefits only with us. For example, DAX 30 or also euro dollar, typically spread of just 0.8 points or pips during the main trading hours without any additional commissions with our main account, Admiral Markets. All details also here. Check them out on admiralmarkets.com. There you will find also something about our contact details. You can call us, you can send us an email, or visit YouTube or Facebook. Everything linked from our web pages. Yeah, enough from my side. And now it's time for Jens Klatt. Good morning, good day, bienvenue, or whatever. What's your view to the markets today, Jens?
Yes, hello and good morning also from me. I'm also located in Berlin, so good morning in this case. And I'm really happy to be here and hope to give you some valuable insights in my thoughts of the day. Yesterday, in fact, was a beautiful day because both setups presented worked out. One was for the DAX, one was for EURJPY. EURJPY took a little till the market really accelerated. But some of you probably have seen that Euro then into the evening, finally caught a bit, and for whatever reason, I probably was kind of a delayed reaction to the comments from Donald Trump, who yesterday in the morning or Monday in the evening, mentioned that he's not really happy to see the Fed raising rates, and that resulted in a push in the US dollar lower, and especially euro was capable of pushing higher. Well, it's difficult to say why, but something is definitely worth mentioning. The euro has, compared to other currencies, like pound sterling, for example, or the Japanese yen, the euro was one of the last currencies who saw a net long position in the so-called Commitment of Traders report, which is usually published once a week from the CFTC, and is showing the positioning of professional traders in this case, so non-commercial but also commercial traders. And then showing their position based on the greatness of their trade, let's say. And yeah, so interesting enough, last week the numbers then finally switched over to net short, but it wasn't really significant. And that said, somehow this makes the impression that big speculators are probably seeing the euro still stable, even though there are some reasons to be skeptical about the euro. May it be around the situation, a political situation, especially in Italy, for example, for whatever reason. Nevertheless, numbers don't lie, and that said, the Commitment of Traders report displayed the fact that the euro was still bid compared to other currencies. Probably that was the reason why the euro took off. It did. And so we reached our take profit level. Today the trade wasn't triggered yet, but probably this will something we'll get to see that in the upcoming minutes. And that's the first setup I want to present to you. The second, unfortunately, won't be triggered today anymore. Nevertheless, I want to give you some thoughts why. This is on the DAX then. So the setup can be seen here. Respectively in the chart above. I'm using here the mini terminal from Admiral Markets. You can download this, by the way, for free as a live client and use it and have unlimited access to it. If you're a demo client, I think it's limited to a 30-day period. I highly recommend it because it makes trading with the MetaTrader really, yeah, a great trading experience, to say it that way. Probably the MetaTrader 4 is, or I'm sorry, not MetaTrader 4, MetaTrader 5 in this case, I'm sorry, is a little old, or some might say, hey, well, it's not that dynamic as I need my trading environment to be. But the MetaTrader add-on here, this tool, the mini terminal in this case, is something which is completely changing that. And what you can see is not only a price ladder here, but several options this mini terminal is offering. You can now draw here, for example, those levels higher and lower. I won't do it, by the way, because that would directly affect my order here. But just to make sure that you know where to get this, just check the website from Admiral. There you can get it. Okay, so the order is as yesterday, based on this range, this Asia range here, which I defined between 3 a.m. till 10 a.m. German time in this case, so Central European time. So the stop in this case is placed in our case below the chart, because this purple line, this is our trend filter. It's the exponential moving average 11 on an hourly chart in this case. We are trading above this, and that's the reason why we only favor long engagements. And in this case, find a buy stop here placed at the high of this range, currently at 127.905 here, while the stop then is placed at the low of this range. In this case, 127.47.5. So there's an overall risk to this trade of 43 pips. And now you can also see here at the top of the chart, there's a take profit level, which is 73.5 pips, 74 pips away. Why is it 74 pips? That has something to do with the risk-reward ratio. We are going here after risk-reward ratio of 1 to 1.7. This is a purely statistical number, so this approach has been profitable for more than 10 years, over a decade. And what can be found out here when looking at those numbers is that 1.7, risk-reward ratio of 1 to 1.7 is the most profitable one. So the one which is generating the most positive outcome in terms of an expected value. And so obviously you can see here that the take profit now is placed at 128.64. Some might say, well, really, because the market looks a little extended. If we zoom out of the chart, you can see obviously that the euro has already advanced quite much against the Japanese yen, especially when, for example, also looking here at the push yesterday higher. It looks a little extended. Nevertheless, the thing is, it's a trading approach which is just traded. We don't question it. We know it's profitable. Hopefully, we'll catch a profitable trade here once triggered. Nevertheless, we can't be sure. On the other hand, yesterday I was somehow sure, and I had a gut feeling that the market won't make it on the upside, and then I see the market reaching my take profit into the evening. And this happens quite often, and it's showing gut feeling is a nice thing, but nevertheless, at the end, we should just trust our system more than our gut in this case. And that's one of the reasons why I will trade the setup today here too. Probably we'll get to see here the fill in a few seconds. It's only 5 pips away. Even though I have to say it's not that spectacular, because if you are filled, we have nothing to do with the trade anymore. It's a make or break setup. That means we are filled here, and then we just hope that the market reaches our take profit level, or we get stopped out. If we do not reach the take profit level, nor get stopped out within the next, in this case, around 10 hours, we'll manually close the trade at 9:50 p.m. German time. This is 10 minutes before the equity markets stop trading. Yeah, we just take out the trade at whatever level we are then trading, in fact. And that's it on EURJPY. Nothing more to say on this. Probably a little more interesting is this. Oh, that's interesting. Now we're seeing a push lower here after the market pushed higher in the DAX. For whatever reason, where this candle comes from, not sure. But what you can see is I'm working with a buy limit here, and I have to work with a buy limit because I didn't catch this break higher here in the DAX. So in fact, this is a little unfortunate, and because we are having a 24.5 chart here. Somehow there's a little interruption within the trading hours, but the thing is that sometimes here, thanks to the low volatility within this time span between it's 10:01 p.m. German time till 7:59 a.m. German time, there's usually no trading taking place, but trading is or the main trading hours in the DAX are in fact between 8 to 11. 8 a.m. till 10 p.m. German time. This is when the future DAX is open, and even more liquidity should be expected in the really main trading hours. This is once Xetra opens. This is when the spot market comes into the market or comes to life. This is between 9 a.m. till 5:30 p.m. German time. So, and now the thing is that nevertheless, some liquidity providers, those used by Admiral Markets in this case, are nevertheless quoting around the clock, let's say. And that's why sometimes here you don't, you see not much volatility, but nevertheless, this exponential moving average is still calculated. And that's why it somehow flattens out. In this case, we see, in fact, that the market is closing above this exponential moving average. The thing is, if you're looking at the future DAX, for example, you will see that here, in this case, we were still trading below this blue line. And that's the reason why I didn't trade the setup here, but in this case, I'm now working with a buy limit order. Usually, from a pure technicals perspective, you usually say, okay, I'm trading the breakout now long because we're trading above this blue line. And then we see the breakout of this range, which is defined between 8 a.m. till 9:05 a.m. German time. Why 9:05? Also something very interesting to note probably, because at 9 a.m. German time, Xetra comes in and there's lots of volume pouring into the market. And this results usually in the market spiking higher, lower, and presenting itself in a very, very erratic way. And with this erratic market environment, you just want to avoid getting stopped into a trade with no real significance when looking at the breakout itself. And that's one of the reasons why I use this extra filter of 5 minutes in this case, waiting till the market then starts to stabilize, that the volume and the orders are all placed, the market stabilizes, and if the break then occurs on the up or on the downside, I know that it's a significant, most likely a significant break, and then position myself. And yeah, so the breakout here occurred. Unfortunately, there was no pullback to this level again. By the way, when looking at the EMA 50 here, on the FDAX chart in this case, it's very interesting to see that in fact we traded below this filter line, which means we are not allowed to take any long trades till we are trading above this blue line. And those two reasons are the reason why currently I'm not positioned in the DAX, and I have some doubts whether or if there will be such a retest. That has also something to do with this line in general, because now you might say, okay, well, we can just keep the order here and everything's fine. I will delete it right now here, right in front of your eyes, and I will tell you why I'll do this. 1 second. First of all, delete it. So we only focus on EURJPY here. Why do I did that? What's the reason for doing that? Well, that's interesting when you look at market environments like this one here. This is, in fact, it's the downside, but it's showing quite significantly why I do that. Well, we had some very volatile market conditions. That was on Friday, for example, but something you can also see several other days, yesterday, for example. So we're trading in a narrow range, and then the market starts to drift lower. And what you can see is that the market respects this blue line quite often as a resistance in this case, but it's the same for the long side, and accepting it or respecting it as a support line. And once the market breaks above or falls below this blue line, it usually gives a trend for the upcoming trading hours. And it changes once the market pushes back above or falls back below this line. So this said, looking back at the current situation, what can you see is we are trading above this blue line. So the intraday trend currently should be and has to be considered long. Nevertheless, if we are now falling lower and got triggered here on 365, in this case 12,365 points, the problem is that we are then dropping below this line and not finding ourselves in a long environment, in fact, anymore. And that's something I definitely want to avoid. So I was fine. I was more than happy if after this push higher, there was a quite sharp spike, probably lower after the push back here, push above this or out of this trading range. Nevertheless, it didn't happen. In fact, the market drifted higher, took out, by the way, these highs from yesterday. Currently, it looks as if it was a fake out. And now this exponential moving average 50 here has already traded, or is already in the region of this 5-minute DAX again, the current price, and then it's something to avoid here. I'd like to avoid here to go long below this exponential moving average 50 on a 5-minute time frame, since I consider this to be my my trend filter for the setup itself, but also my advantage identifier for the trading day. And so that's the reason why I just took out the order then here and want to focus on EURJPY here. And let's just see whether this order will be filled or not within the next minutes, probably hours. So that's it on DAX and EURJPY. Finally, I'd like to have also here a glance at a very interesting currency pair for today. This is not an intraday setup, not necessarily an intraday setup, but it's definitely something worth watching, probably for the next days. And there was something really interesting happening last Friday in Canada. There was numbers around the inflation which were published, and it was one of those occasions when we really got something interesting to see here. Numbers came in significantly above expectation. So when comparing it to other countries, this development is something around inflation numbers, which is not that common, or was that common within the last, not only months, but years probably. And so this number coming in significantly above expectation, 2.5% was expected and 3% was the number published. Well, it shows that probably Canada is about to see some solid economic growth. The problem I think is that Canada has also a potential housing bubble forming, and if this housing bubble bursts, there's a good chance that this could weigh more heavily on the all in all a rate hike outlook, let's say, of the Bank of Canada, and could weigh more heavily then on the Canadian dollar and probably push it lower. Nevertheless, currently Canada is probably seeing some solid growth, some solid momentum, and that goes hand in hand with the comments from the BOC president, Stephen Paulos, who said that there will be rate hikes, it will be necessary to hike rates here in the near term. And with this in mind, and looking at inflation data, today's retail sales numbers, which will be published, could see an upside surprise too. So when looking at the economic calendar here from Admiral Markets on the website, what you can see is that numbers are month on month expected to come in at 0.1 after the last numbers came in at 2%. And if those numbers come in again significantly above expectations, not necessarily at 2%, that's probably a little too much, but nevertheless probably at 0.5 or so, and supporting those numbers around the inflation, this could mean that the Canadian dollar is probably about to gain some traction, especially against the US dollar, which is currently seeing some weakness based on the fact that Donald Trump was already mentioning that he has a problem with the quite strong US dollar currently. So when looking here at the overall technical picture, what you can see is, yes, we've seen a breakout on the upside, and now this is a potential long trigger. Nevertheless, it's quite obvious that after first corrective move, the USD couldn't take on further momentum and go to higher highs here. The same is true here for this push. And this is somehow showing that the demand against this region here of around 130 is probably more and more diminishing. And with this in mind, if numbers come in better than expected around retail sales, I think there's a good chance that we will see a push below 130, 129.70, 130, and probably see further losses here in dollar Canadian dollar, or gains in Canadian dollar in this case, and probably push in the upcoming days then down to 27.40 to 27.50. So today, 2:30 p.m. GMT, so German time, 1:30 p.m. GMT, is very, very interesting for those trading the loonie, the Canadian dollar. Based on the fact that retail sales numbers, once they come in surprisingly better than expected, could give the Canadian dollar some backwinds and push it higher, respectively dollar CAD in this case, then lower. Yes, and that's it from my end. So I hope you enjoyed this webinar.
So thanks a lot. Sure. Tomorrow is another day. We have 5 days a week, 5 different traders. So if you'd like to join us again tomorrow, same time, same place. And if you'd like to see that again, what you listened right now and watched right now, a couple of hours later, it will be available on our YouTube channel. So just visit youtube.com/AdmiralMarketsFX and you can see it as often like you want to do it. Greetings from Berlin office. Thanks to Jens Klatt, and all the time, good trades to you. Bye-bye.